There's been no stopping for the fall for the benchmark indices because Nifty Bank is now down over 2,200 points right now, while over 1,000 points of cut is what we are seeing on Nifty 50. Definitely one of those black Mondays coming in for not just Indian markets but global across. But what should be your strategy amidst this market move? Let's find an answer to that. We are being joined by Devender Singhal, who is the EVP and Fund Manager at Kotak Mahindra AMC. Hi, a very good morning, Mr. Devendra, and thank you so much for your time. Pleasure having you. But firstly, help us with your take on the markets because in the last 20 years or so, we have seen falls of 2008, 2020 as well, though the reasons were very different. But the clear picture is that post these falls, there was even a stronger recovery for the global markets across. But this fall, how are you seeing this? Is this a different case altogether, or do you believe that some more fall will give better opportunities for even a better growth?
Hi, thank you for getting me on the show. See, all falls, when you look at a longer term journey of the markets, they looks like a good opportunity to, add to good quality names, good earnings growth in your portfolio and realign your portfolio towards a longer sustainable growth goals of wealth creation. I don't think this time it's any different. The only thing is that the way our Indian markets are reacting today, we are hoping that India would be able to get better terms of trade with the US, and something would be basically coming up on our side over the next couple of months therein. It is also being factored that we would be relatively better off than the world over. And you can see that from where our markets are in terms of decline and how the other emerging markets are being faring today and over the last couple of days. So I think that some bit of optimism is still there. Hopefully, we should be able to get a better trade of terms, and that is what we're also hoping for. And if you look in that context, I think this would definitely pave way for a good and a stronger and a longer growth journey road ahead for the Indian markets and the economy therein. So yes, we would like to look investors to look at this uh, constructively, but you are right that the volatility would be there pretty high over the next couple of months till this gets sorted out.
Singhal, hi, good afternoon. This is Ankita also joining in. Mr. Singhal, like you mentioned, that relatively India is better positioned than the rest of the world. In fact, when the bilateral talks happen, there is a chance that the rates might come down as far as India is concerned. So now, once the dust settles, now that will take at least 2 to 3 odd months. Once the dust starts settling in, which pack do you see leading from the front? As I can see, you hold a lot of your sectoral allocation. It's tilted towards the banks. There are a couple of other names. We'll come to that. But first up, for the financials, do you see the banks leading from the front? Nifty Bank has been lending support thus far. Today, it has, of course, succumbed to the selling pressure as well. But really, the banks are likely to lead the charge from the front once the dust settles?
I think you have to wait and watch as to which sectors would lead the charge from the fund once the dust settles. Uh, at this point in time, we are positive on the banks, but we are a bit underweight. We were fearing NIM pressures leading to earning growth being a bit muted for the sector. But if you look at financial services or diversified financial services, I think there the visibility tends to be a bit more better than the banks at this point in time. So yes, there could be some constructive investments which investments investors can do on that side of market therein. But I think till the time that dust settles, you would also have a sense on how the overall global economy would fare. Now, if we continue and if we believe that India would get a better trade of terms, Ankita, I think what would happen is that there could be a big option for the Indian industries to basically increase their global share, especially in the US markets, they're on the export side. So only time will tell. One has to keep an eye on that. But yes, possibly good times ahead if we get a deal better than other countries so far.
But we also understand that you track the consumption basket very closely, and it is a diversified basket altogether, be it the autos, the pharma space, as well as some of the discretionary plays as well. But given that a lot of these sectors are now globally linked, especially the pharma as well as the auto space, give us some sense that what kind of readjustment are you looking to make in your portfolio at this point in time? And the news flow around is a bit concerning, but are you concerned?
Yes, overall, these sectors do have a very large global linkages. Fortunately for us in the portfolio, we have names which are more domestically dependent, and especially on the discretionary side of the business, it is basically largely focused inwards rather than outwards. But yes, you're right that auto, for example, is a very very large component of Indian manufacturing, and if that and that has very large global linkages. So if there is a turmoil in the world, there is a slowdown in the world, that sector would not get untouched. So one has to be really careful of going forward.
Also, Mr. Singhal, let me stick to the consumption basket, because people have been talking about a revival in consumption. Now, from the 1st of April, the tax relief has kicked in, and we are penciling in better earnings, and hopefully the consumption should start picking up. But, when there is, a tariff threat, the inflation is likely to go up. Now, inflation in the US and globally will also mean bad news for India as well. Inflation is likely to get triggered. How do you see the consumption theme then playing out?
See, first of all, the consumption basket in both the countries are very different. So what is leading to inflation in US may not be the actual case in India. For example, we have a very high reliance on energy, and if the way the energy prices have been coming down, it is actually a good news for the domestic consumers to by and large. Now, our view on consumption, as you rightly said, that you have getting a tax off, so you would start seeing some bit of that now getting back into the market in terms of consumption, more better and better quality consumption happening. But I think you would see more focus on the discretionary side of the consumption rather than on the staple side. So which is where our focus is, and we think that that's would likely to do slightly better than what the overall consumption basket would be. And yes, if inflation happens, but I think, as I said, both the global inflation and Indian inflation factors are pretty different. Hopefully for us, if the crude basket itself comes down, I think we are in a good state therein.
Feels like, Devender, because the crude is coming down, what we are witnessing is that the Indian rupee is stabilizing. Well, of course, the dollar index movement is to be seen going ahead. But and we also don't have much of an exposure to the US markets in terms of the exports versus what the other global economies already have. So it does make a bull case scenario right now. And the consensus call, Devender, is coming right now is forget global. Just focus on the domestic plays, which can actually help the consumption. But within some of those domestic plays, Devender, help us understand that which other sectors other than consumption that you talked about are you looking at, or investors should look at this point in time?
Okay, see, what we think is that currently the hiding space, if one is looking at, is only places where the earning growth visibility is going to be pretty high. And these pockets are a bit few in numbers now. So if I tell you, diversified financial services is one sector, healthcare services is another, telecom services is another, and we did mention about the discretionary consumption space. I think these are a few spaces whereby you would see earning visibility being pretty high. So yeah, I think they should see a revival faster than what the overall market would be, or a downside which is lower than that.
With that, thank you so much, Mr. Singhal, for joining us today.
If you like this video, then like, share and subscribe to ET Now.